From your writing style, you're more concerned about the discussion around a regulatory issue or a compliance issue, and you bring good perspective from multiple angles. And the best part is you do walk away with some actionable, intelligent things that you can draw away from that. So I want to encourage our listeners right from the beginning. So let's talk about the actionable and the creative compliance. Put those two together for us and create a construct around that if you could.
Yeah, so I'll give you a little bit about my background. I was at a big law firm doing mostly commercial real estate work for about 5 years coming out of law school, 1989 through 94. Then I took a job in-house being general counsel of a bank. We had 3 mortgage subsidiaries, wholesale, retail, and wholesale second mortgage lending company. I left there in 2009, so it's been a little over 15 years. And the thing that really that in-house experience gave me was the understanding that giving legal advice, frankly, is pretty easy from the perspective of I just can say, here's how I think you should do this. The hard part is executing.
Yes.
And executing requires not only that you got to get people to do what you want them to do, you got to have systems that can make that work, you got to put procedures that can implement it. Executing is the hard part. That's what business people do. And I'm at least sensitive to that. I was on the receiving end of a lot of advice and a lot of good advice. There was a lot of good attorneys, people that I still view as colleagues today that taught me what I've learned being in the industry. But also it is really important to sometimes understand that, gosh, you're not going to be able to do something even if it's what the law says you have to do or the compliance rule reg tells you. Making that work can be very challenging.
Yeah, and I think it's that challenge of how to work a regulatory risk, legal risk, operational risk with the risk of just running a business. And sometimes it's not compromising the risk per se, but it's finding a way to thread the needle so you can get the business in the door. And the safest territory is inside the middle, and no one does business in the middle. We're all out there having to compete on the outside. How do you navigate that? What's some of the principles you would share with our audience? Someone listening and say, hey, I want to see if I want to retain Brian here. How do you do?
I love the people in this industry, the mortgage banking industry, mortgage lending. They're very creative, very sales oriented, and frankly, desire to be compliant, desire to follow the law. They're not trying to be
most aren't. Yeah, there are a few. Sadly, I think
they're really trying to do things the right way. And they'll come to me with an idea, and we want to do X, Y, and Z. And I'll say, you can't do X, Y, and Z, but you can do X, Y, and Q as long as you do the certain things. Now, I've learned over the course of my experience that you have to be very careful with how you say yes, but. Because like by the time
that's funny, but I'm chuckling because I've heard that you say
they're
before.
Out the door already doing what they asked you, and you didn't get the but part out to say these are the things you have to do to make it work. But funny. I do try and philosophically to find a way to help people accomplish their objectives. That's always been my sort of North Star, is that in life what I want to do is help people achieve their objectives, help facilitate transactions, help facilitate conversations and business plans. And that's hopefully what I've been able to do in my career.
Well, you see how many people at the conferences that we speak at, how many people respect you, come up and talk to you, and that are clients of yours. And so obviously you've found a way to do that and be able to do that very successfully over a long period of time. We also should note that you're a Harvard Law School grad. So kudos to that. And that's not a bad place to have gotten your law degree from. Let's talk about some of the things with thinking about what's going on in DC right now. CFPB, I want to get some of the things you've written about this on your newsletter, but for our audience, I want them to be teased to go back and read some of your newsletters on this topic. But what is going on? CFPB happenings.
Yeah, I guess I never really imagined what we're seeing today could actually happen. There was a lot of conversation in the first Trump administration about what would the CFPB look like under Trump. And initially we had Mick Mulvaney as an interim director who called the agency a sad, sick joke. That's why he showed up the first day with a box of donuts to maybe smooth things over. I'm not sure that would be the best way to do it. But this time around, there's no donuts.
There's no donuts. No.
It's just
a sledgehammer.
The idea is, at least, what I'm
observing, dynamite may be appropriate, more logical or more better explanation of what they're trying to do. There is a sense of wanting to blow it up per se. I remember going through the Dodd-Frank era, and when we went through, we were combining all these regulatory bodies. They mashed together so many different regulatory bodies into the CFPB. I get really concerned about not having some type of oversight on our industry for the fringe elements that push us, that have an impact on all of us. We watched what happened in the last housing crisis when we just went too far afoot that brought about the CFPB. Your thoughts on all of that?
Yeah, very clearly, there are some babies in the bathwater at the CFPB and the things that they administer. I would put in that category the ability to repay rule, QM. That's a rule that protects lenders from racing to the bottom, underwriting standards. We got way over our skis. It created a housing crisis, or whatever you want to call the meltdown. It was bad. Let's put it that way. And I think that rule does a good job of keeping us, making sure that borrowers can succeed in their loans. I think that's an important law.
Yes.
There's been absolutely no litigation involving that law. There was one CFPB consent order, or not consent order, but a case that they had just filed recently. They dropped it as part of this new administration. They dropped virtually all of their enforcement actions. Yeah. But that doesn't mean that there's no law anymore. It doesn't mean that there's no enforcement to be had. First of all, the states can still enforce most of that.
Right.
And there's nothing to say that the CFPB isn't going to regroup and look at what are very clear violations instead of the kind of things that they were doing, which was stretching the law, this regulation by enforcement that everybody was troubled by, because it was really hard to know where they were going next. Changing, I always said, did Wells Fargo really need to be told that opening accounts for people that they never authorized was unfair and deceptive? Like that it's pretty obvious that
yes.
Certain things are violations of the law. Other things, when you're
More
stretching
nuanced.
RESPA or stretching some law into areas that you never really thought were going to be a problem, and certainly we can talk about fair lending as well. It's very difficult to know how to operate in business, and business likes certainty to be able to build and to grow. So right now we actually have uncertainty in terms of how things are going to be enforced.
Yes.
But keep in mind, on a lot of these consumer rules that formerly were transferred over to the CFPB, there's a lot of private rights of action on those as well. So the industry used to deal with class actions all the time when I started. Yeah. We haven't really seen that since the CFPB got stood up.
We haven't. Yeah.
And if the CFPB backs away, you might see class actions start coming back again.
I get more concerned about that going out to the states. We're recording this on Thursday, the 20th of March, and we're hearing about doing away with the Department of Education. Is a pretty substantial rumor going on. I think that would take an act of Congress, but he can certainly defund it to the point where it's factually gone away. I get worried about, I'm not getting into that issue, but I'm using that as an example. CFPB going away and it getting pushed out to 50 CFPBs effectively in each state creates a nightmare for lenders. And that is something that is very disconcerting to me when we look at, we're all trying to struggle to maintain or manage our costs. How do you do this when you're a multi-state lender? That becomes very complicated.
I think the difference between how the CFPB operated and how the states are likely to operate is the states don't have any interpretive powers over these.
Very good point. Yeah.
So they're unlikely to stretch engage in regulation by enforcement, which isn't to say that they can't.
I'm thinking of a couple states which have been fairly famous for stretching, with California being one of them.
And they also, but what I was also going to say is they have their own statutes.
Yeah, then they have,
that they then can interpret or seek to stretch interpretations of. Certainly California, New York, New Jersey, these kinds of states, they have their own laws that may be more stringent than the federal laws. So you have to be aware of that as well.
Yeah, I get the whole no CFPB and then going out to the states. You bring out some really good points on there. I'm looking at our lenders that are struggling already to maintain complexity or compliance to the complexity that's out there, and it's only going to go extra. So I could sit and spend a lot of time on that one. Let's talk about RESPA reform. What are your thoughts? What is realistic, Brian, that we could anticipate?
Well, what's interesting is I think the MBA proposed a very detailed RESPA reform proposal. They rolled it out last year at the annual meeting. I was actually involved in helping put that together with a big team of other attorneys. I wasn't the only one. There was a lot of other people that had a very big role. And I'm actually thinking given the way the CFPB or maybe the Trump administration, DOGE, this whole philosophy of eliminating regulations, eliminating the regulators, deregulation, it almost seems to me like the CFPB will be looking for opportunities at some point in the future here to roll back regulations. But I think where they'll start is with some of the things which are pending or easily turned around. Servicing regulation hasn't been finalized, policy statements that can be reversed very easily. Those are the things where they would probably start. Things like RESPA, LO Comp. LO Comp, I think, I've written many times about why that has absolutely no positive benefit for consumers, but and certainly not for the industry.
Certainly, yeah.
But those kinds of things will require additional congressional action or regulatory action that's more formalized. So you got to do the hard lifting for those kinds of things. And so the RESPA reform question, which you started with, maybe we can ask for more as an industry than what we did in there at this point, because I think we're operating in a mindset of a regulator that was very reluctant to give the industry anything in terms of flexibility. And I don't know, maybe there's a greater opportunity now where you're looking at a philosophy that says we start from zero and then we only do what we absolutely have to do, instead of we start from 100 and try and make it 1,000.
Good point. Yeah, good point. One of the areas you touched on was LO Comp. It's another one of those areas which is not serving the consumer well. It's not serving the mortgage industry well. What is the probability of LO Comp changing?
Probability, I can't really measure at this point, honestly. It's higher now than it would have been had we had a different election result. That's right.
Yeah.
The industry's
but would you agree that it's necessary? It's needed?
Oh, yeah. So the industry, this would have been back probably at least 7 or 8 years ago, sent a letter to the CFPB saying we want to see that LO Comp be amended to allow for discounting at the point of sale, to allow for discounting for bond loans and low-income housing kind of loans, and then also to allow for chargebacks to loan officers who make errors. Those would seem very commonsensical kinds of things. What would be the problem with lowering the cost for consumers or for charging back for errors? It didn't seem to make any sense why they wouldn't agree to that. But yet that was difficult for them to even, and then they ultimately did nothing with that proposal. Now you look and you say, we have a law that says that people can't reduce their own compensation to make a deal work. That's the law. That's what LO Comp says. You'd have to think that a much more market-oriented
solution, yeah.
Market-oriented regulation,
yeah.
We'll see the wisdom in getting rid of that.
Yeah, I hope that one actually happens. The next one that's on the list is one of my favorite topics, is fair lending. That is a legitimate concern. How do we deal with some of the inequities that we know have been out there? And we look at even the issues within DULP, and we still find inherent issues in fair lending. It's somewhat systemic across the...
Yeah, so let me just start by saying, throat clearing, that fair lending is important, that we have a disparity in this country, particularly for Black homeowners. Yeah. Their rate of home ownership is significantly lower than whites and Asians. And actually, Hispanics have been improving in that regard, but still below what other racial categories have. We should do better.
Yeah.
Okay, we should find ways to do better. That said, the law around fair lending has gotten ridiculous.
It is. It's gotten it feels like it's been weaponized almost.
It has. And so the fair lending laws say you cannot discourage somebody from applying. And they've converted that concept in this reverse redlining concept to say discouragement means the failure to encourage. In other words, if you don't encourage somebody, you're discouraging them. And how they
where's the boundary on that?
Encouraging them is that you need to open offices in their area, which, I mean, is that what drives people to come in to get a loan, to have an office on the corner? I don't know, but it seems unlikely. Everyone's doing things on the internet these days. The kinds of things that they are identifying did not move the needle from the perspective of
Yeah, look at the
what
look
I
at
was
the
talking
result.
about before.
Yeah.
Are we doing anything to actually impact the rates of home ownership? Those kind of things were just ridiculous. I shouldn't say ridiculous. They were ineffective,
Yeah.
and
That's a good way to put it.
and the industry was being held hostage to these things, which was a political agenda and not to achieve the result that, again, I started with, that we should be working on.
Yeah. Really good point. Really, you make some really solid points on there. One of the things you talk about in your musings is rule of law. I'd love to get, if you could just expound on that a bit, what you mean. You really write well on this one.
Yeah,
On all of it. I don't mean to say you write, but I particularly enjoy some of your writings when it comes to rule of law.
thank you. It's sort of the bedrock of our constitutional society here, right?
Yeah.
We've agreed to live by this Constitution. And one of the things that is required is that we all agree to the rule of law. That's part of our social compact with each other. That if the courts make a determination that we're going to live by it. One of the big worries, and we've walked up to the edge many times with this current administration, is the president going to abide by the rule of law? And many people would say he hasn't already. He's doing whatever he wants. I'm not sure about that. He's appealing decisions. He's complaining about decisions. He's walked pretty close with this deporting of this Venezuelan gang members,
Yes, yeah.
and not turning the plane around when the court issues an order. And I think there's some pretty questionable things there in terms of rule of law. But I also saw what Chief Justice Roberts said, which was essentially, hey, we don't deal with decisions we don't like by calling for impeachment. We deal with decisions we don't like by appealing them,
Yes, exactly.
which is the right answer.
Which is what he's doing. A lot of this comes into, in my opinion, how it's been reported. Thank God we've got podcasts now. We have a lot of different ways which information and news is getting out. But there has been, it seems like, Brian, there's been an agenda within certain news organizations to steer things a particular way. And let's return to a rule of law. And I encourage people to sign up for your Mortgage Musings because it's so well written, Brian. And I just like your perspective in there. As I was getting ready for this interview, I went through and I was going to highlight some of my favorite ones. I'm highlighting the whole dadgum thing. It's really good what you write and your perspective you come from. So I really encourage people to listen. Where do you think we're heading just as an industry, Brian? You've been in this. I've been at 51 years. You've been at it a bunch of years. Where are we heading? Is this a pendulum swinging? Or are we heading into a new paradigm or a new era per se?
Yeah, it's a great question. This is a cyclical industry.
Yeah, it always has been.
Nobody listening to this doesn't already know that.
Yeah.
I started in the industry. The very first thing I did, 1994, was I spent most of my coming out of commercial real estate. Most of the things what I was working on was trying to get out of leases, sublease space, and terminate leases. We were just trying to cut. People were getting laid off. It was a rough time. And then all of a sudden we had, I don't remember exactly what year. I think that was the year I refinanced my house 4 times.
One
You
year,
know, it's
yes.
funny.
It made
I sat
economic
there-
sense to do that. Yeah.
98, 7,
Yes, yeah.
something like that. And I remember thinking, I have nothing to do at work. Because I'm the lawyer, new ideas. Nobody needed me. They needed me to help close loans. I'd go work weekends and help close loans.
Yeah.
But I couldn't do that. So I'm tapping my pencil and everybody else is busting their tail off to try and get loans closed. So you asked me, where is the industry headed? I don't think cyclicality is going to get wrung out of this industry.
No.
So I think we're still going to be facing a lot of cyclicality. But you may see a lot of new ways of the way in which homes are sold, I think is changing, bought and
Yes.
sold. All these changes with the NAR, the MLS, a lot of that is going to impact what it is that we do as mortgage lenders. Consolidation, I think, is certainly
That is going to
happening.
continue. Yes.
And not just consolidation of mortgage companies becoming bigger, but also becoming more diverse. So you saw Rocket just acquired
Redfin.
I've been very involved with affiliated businesses throughout my career, but never on that scale and size. I haven't seen that, but I think you'll see more of that. And I do think, I guess I maybe in one of my musings I called it the Amazonification of
Yes,
of
I thought
real
that was
estate.
a really good observation. I think
mean,
you're one that we've coined it ever since.
What's stopping Amazon from selling real estate and being the marketplace for that, like they're the marketplace for everything else, and certainly would be convenient for shoppers. Yeah, I think there's going to be a lot of changes. You got to be nimble. Interest rates could come back down, and we see all kinds of refinances. Interest rates could go back up, and things slow down. But
I think the introduction of AI is going to be a real game changer. Any thoughts on how AI, from a regulatory standpoint, is it going to help us or hurt us?
I haven't thought about it in terms of regulatory. How would it impact the regulatory world? I have thought about it, how would it impact my job as an attorney.
That's going to have a huge impact.
And I think also in terms of compliance officers and auditors, I think it should dramatically assist.
Yeah, assist is the key word there, because what we talked about at the very beginning of our interview was actionable and creative. And I think what you do really well, and other attorneys need to learn how to do this well, is how to help navigate to actionable product that's going to help the business grow and without being in violation, and do so in a creative, but not take creative to the point where you're going over bright lines. And I think that's one of the things that I wanted to underscore when I was reading that. I highlighted that in your bio. I think that's one of the things that AI will never be able to solve. It goes through immense amount of data, can bring us a lot of information, assist, as you said. But at the end of the day, the creative part of it and help what's going to be good for business rules, I think maybe a little while before we see AI working on it.
AI, the problem, the hallucination thing with AI is a real
problem. You brought that up. I was talking about it when I was in New England at the New England Mortgage Expo, and you brought it up because I was talking about the new one that I'm using that I have got so perplexity. And you said, Dave, you raised your hand and from the audience and said, let me tell you, there's some serious hallucination that can go on within perplexity. And I think that's probably a good place to end. Talk about what you raised your hand to mention about this, and our race to rely on or be enabled by AI is good, but boy, you got to use some boundaries on that, or you use some perspective.
And by the way, I still use Perplexity a lot, notwithstanding the fact that I'm aware that it has problems. But I've asked it because I wanted to find. I've done like 80 some of these mortgage musings, and I always like to refer back to the ones rather than repeating everything. I just refer back to what I've already written. And I asked it to find the one that I wrote about the dispute or the rivalry between UWM and Rocket. And it gave me one, and I wanted an older one because I've written about it a bunch of times. And then so I asked it, no, give me another one. And then it basically just gave me a list of fake ones that I never wrote. And I was like, the headlines were something I might say, but I was like, oh my gosh, this just made up titles.
Made up crap.
So you have to review this information with a filter of experience and knowledge. I've been able to have AI. ChatGPT can write a great letter. I once asked it to write a demand letter for an employee who was overpaid. I'd say about 80, and the tone was right, about 85% of the letter, I was like, I can use this. And this is the kind of thing that maybe like a first or second or third year associate attorney might be able to do. It's not bad. But again, asking for factual information, be very careful.
Be very careful. Great perspective. Brian, I'm just so thrilled that you took time to come on and be on my podcast. It was a delight to meet you. And again, I've gotten to know you more through your Mortgage Musings since I met you. And I've always heard you quoted and talked about, but now I understand why people respect you to the level that you do. And I'm really grateful that you took the time to come on my podcast.
Thank you so much, David.
You bet. How can people reach out to get to know you, connect with you? They go, I like this guy. First of all, subscribe to mortgagemusings.com, folks. Go sign up. It's free. It's valuable. And your perspective will bring you. And it's written in such a way where the average non-legal person will understand it. That's what I appreciate about more than anything else. But other than that, how can people reach you, Brian?
Yeah, the easiest is brian@mortgagemusings.com. That's not my legal email address. I mean, in terms of if you're looking for specific legal advice, I'll switch you over to my Catton and Temple web email address, which is blevy@cattontemple.com. But the easiest one to remember is probably the Brian@mortgagemusings.
Yeah, start with Brian at Mortgage Musing, and then if you have a specific issue, he'll direct you over. Catlin is spelled C-A-T-T-E-N, Temple, T-E-M-P-L-E.
K-A-T-T.
Okay, I said C, I meant K-A-T-T-E-N, Temple. Brian, thanks for being here. Appreciate it so much, friend.
Oh, thank you. Enjoyed it.
You bet. Listeners, this podcast is made possible by our sponsors. We're grateful for them. Byte Software, Finastra, Angel AI, True, Candid, Mortgage Bankers Association of America, Lenders One, the Mortgage Collaborative, Mobility MMI, Modex, Redder, and Knowledge Coop. Thank you, sponsors. We appreciate you as our listeners, and be sure to like and share this podcast with others. We appreciate you. Thank you for being here, listeners.
You've been listening to Lykken on Lending. Our passion is to bring you the latest insights, trends, and updates from the world of mortgages. So on this show, if you're a seasoned industry veteran or just getting started, it's your go-to source for all things mortgage. We hope you've enjoyed the show. We'll be back soon. Take care, and we'll see you next time on Lykken on Lending.